Hello, hello, hello. Happy Tuesday. How is everyone doing this fine Tuesday morning? Good morning, Sterling. Good morning, Patrick. I did see that, Patrick. Thank you for putting that in the chat. Amazon to include cost of tariffs next to prices and product catalog. But I thought tariffs didn't raise prices. I thought it was all going to be absorbed. Oh well. That's actually gonna, it's a very interesting strategy. Good morning, Heinrich. Good morning, Daniel. Good morning, Jacob. Good morning, David. Thank you for putting in the earnings, Sterling. Good morning, Richard. Good morning, Jake. Good morning, Royal Palms. Hello, Charles. So what do we got? We had SoFi, which was a beat. PayPal, which was a miss on revenue. Spotify was a miss. What else? UPS was a beat. Coca-Cola was a beat. So we got some other stuff. It's all wait for Sterling to put those in. Pfizer was a miss, another miss on revenue. So, by the way, if you didn't see, Dow's Fed Manufacturing Index yesterday was an absolute disaster. And if you look through the comment sections on it, this is what I'm worried about because of the whole tariff thing and the whole instability with that and businesses not being able to plan, and they cited prices and shortages and everything else. Businesses don't know what to do because this is not resolved. So, and no, that print was horrible. Minus 35 was horrible. We're going to see how their services print today, coming out at 10:30 Eastern. We also had the Liberal Party winning in Canada by a landslide, pretty much. A huge, and the Conservative Party was leading by 20 points a couple months ago. So stuff's getting very interesting. What else do we have? We have Altera, which was a beat miss, another miss on revenue. BP was a miss beat. If tariff lessens the blow to U.S., why wouldn't they actually increase profits in the long run? If tariffs lessen the blow, why wouldn't they actually increase profits in the long run? I don't understand the question. How are they going to lessen the blow on the U.S.? This tariffs thing. The problem is it wasn't like starting out. All right, we're going to do like 10% or 5% tariffs. The proposed tariffs were absolutely psychotically insane because they weren't based off tariffs. They were based off trade imbalances, and you're not going to be able to run a surplus with every country. Okay, that's the problem. And it's a shock, meaning it wasn't dialed in. It wasn't like, all right, we're going to 5% tariffs, and then we'll start negotiating there. And if stuff doesn't start, we can go up from there. It was like, all right, we're going to do 47% on Vietnam. It's not going to work. And you can't shut down supply chains overnight, which is what's happened. Good morning, Anissa. Good morning, Options 22. So, again, thank you for putting in the earnings. So today, we already had the goods trade balance coming out. We had retail and wholesale inventories. I didn't see what Redbook printed. I was looking to see what Redbook printed. There it is, 6.1. So still hanging in there right now. We have the home price index, K-show home price year over year. But we have JOLTS openings and quits coming out at 10, and then the Dallas Services Index. Remember, the manufacturing was a disaster yesterday. So we're going to see how that prints, and I'm going to be looking, if that prints again negative, what the comments are in there. Pretty quiet morning. Starting to pull back a little now. So we have Amazon down a bit. Going to be printing the tariff costs. That's going to get real interesting. That is going to get real interesting. Mega caps pulling back slightly. We have the groups. Let me refresh this because mega caps started pulling back, and now we're starting to see some selling pressure coming in. We are at cycle tops. Okay, so I am watching to see how markets, like yesterday, hit a very key support level. Going to be watching that again this morning. But comm services, consumer cyclical, and energy leading the charge down, then technology. Fed watch is still a pause next week. Remember, next Wednesday is the Fed meeting, and still 4 cuts priced in. Fear and greed, solidly in fear. Schiller PE still, did I refresh this? 34.23. So again, markets are not cheap from that perspective. Sterling put in all the earnings. We got Visa after the close. We got Starbucks after the close. We got Snap after the close. Those are the biggies. And then tomorrow morning, we got Caterpillar, Western Digital. Not a lot tomorrow morning, but tomorrow afternoon is another big day. All right. All right. I think your idea of watching secondary or move off bottom is happening right now on indices. Let's take a look. And here's what I'm looking at. Here's what I am looking at. So we found a very key resistance area. There's been selling pressure up here, a little selling pressure, and so far you can see, again, if you wanted, this level can be brought down based off of yesterday's spike, but you're really about 55.70 as the key selling area, and I'm still looking right around the 54.90 area. Remember, these aren't exact prices. You don't go 55.71. I gotta, that's the magic line in the sand. No, it's an area. You can have spike throughs. That's where I'm watching for the area. And again, support areas is 54.90, 54.90 to 5500. We're in sort of an upward sloping channel. We're going to have to see where this pullback takes us. But this is a key area. If you're looking from a channel perspective, you can still see here we're still sort of channeling higher, but I'm going to be watching down in this area right here to see how it reacts, especially because we had the yesterday price reversal yesterday afternoon in this key area. So that's what I'm looking at. Now, from the daily time frame, we are at cycles at the top, and they're starting to roll over, and we're almost to major overbought levels, and it's starting to roll over. We're trading in the vicinity of the 50. Now, this key area, watching that because that's the first major support area. We also could be getting the first cross rotation zone. So I'm going to be looking at around 54.60. And if we start getting through there, especially on a closing basis, we could see a little bigger pullback because we're at daily and we're getting to weekly cycle potential tops, and we are into the weekly rotation zone. So if this is just a corrective play, that's stalling out just above the first target, even if we spike up and hit the second target where the 50-week EMA is, we're still in the rotation zone. That's why longer term, I'm still watching for potential rollover plays now, because we've only in the S&P only been able to hit that first target. That's why I talked about also raising a stop. The NASDAQ, by the way, if it does break out higher, you still have about 5,600 to 5,605, then 5,630. The NASDAQ has hit 3 times the second target. The NASDAQ also is in the weekly rotation zone. The next key area on a rally on the NASDAQ is about 19,775 for me. Very key support. Coming in, again, somewhat channeling. So you can keep that in mind. Slight upward channel, so we can watch for, some kind of pullback around 19,300 to 19,250, 260 to see how it reacts around there. If we do drop all that, that's also the first level. Look where my second key level, 19,260, is where the first cross rotation zone is. So these are the major things I'm watching on this pullback with cycles at the top. Remember, we don't have to have a big pullback. It could be more of still a sideways correction basing into next week. That's why I'm paying very close attention if we start closing below this 19,260 area, because then it could start into a bigger pullback after hitting the first and the second targets on the double. So the effective tariff rate is near what it was in the 40s post-war wartime. The economy actually continued to perform strongly with high levels of production. That was a very different situation. That's also because look what happened in the 30s, though. That was more based off the war and rebuilding after that. So very different situation, Royal Palms. Dow. Key support level I'm looking at, I'm not going to go through this in detail, but 40,000, about 40,050. Very key resistance at 40,600. Remember, we did not have, this is done with the double targets and the Dow just basing here. We have cycles at the top also. Russell, stalling out at the 1978 harmonic. If we did plow through there, we have a key level at about 1995 and then another key level at 2008. Very key support at 1940, 1941. VIX slightly elevated today, but nothing shocking. Going to be keeping an eye on about this 27.75. The DAX, remember after finishing the doubles, sort of just grinding higher. Key support now coming in about 22,300. Notes bumped up this level. Now I'm watching this. It's trying to base a little higher. I pay more attention on the yields, but 112 is very key on the note futures and keeping an eye here. Lowered the channel to this very key gap open, about 4.18. Want to see how that's going to react. Why? Because we have cycles getting to the bottom. Not necessarily today, but we could be setting up for a buy against support with a percent beat buy, possibly tomorrow. Dollar index. Yesterday triggering the double, hitting the first target, and then bouncing. So we still have a double in play. Now it could turn into a channeling double. That's why I'm keeping an eye based on that stronger bounce. But I'm keeping an eye here. We should still see, probability-wise, more pullback in the dollar, just keeping a very close eye on it. Would actually love the pullback in the dollar because that could set up a longer-term bottoming, a really nice longer-term bottoming pattern. If not, it could be setting up for a very sloppy inverse head and shoulders. Either way, the only pattern right now is that short-term pullback pattern. Trading ranges are really narrowing on equities. Do you think a spike in volatility is imminent again? I don't know if we have to spike in volatility. I mean, if something comes out of the blue, yeah, we could spike, but it's narrowing. But it's narrowing, but look how this narrowing trading range is still pretty large. Okay? If we didn't come off this recent volatility, this would still be a pretty decent trading range. But it's because we've come off of massive volatility recently. So, I will be watching for a spike, but we could still see a pullback without a spike, a major spike. We could see the VIX go up a bit, but we don't have to see a massive spike. What else do we have? We have crude. Still the rotation zone holding. Rotation zone holding. Is the sloppy double invalidated yet? No, not yet. But keeping a very close eye on it. Crude also starting to break down as if we're going into massive slowdown. Natty gas. Was this a percent B buy? Well, it was one off a contract roll. Technically, yes. But it's based off the contract roll. So when that happens, I like to look at the back adjusted to make sure. And even with the back adjusted, it was a percent B buy against the rotation zone. It already hit the other side. Okay? So would I be chasing natty gas higher at this point? No, I'd be watching now for a pullback and a stronger bottoming pattern in natty gas potentially. Gold still in a big, here's an example of a very volatile sideways correction. So huge ranges in gold, but a whole lot of nowhere. A whole lot of nowhere. Same levels as yesterday. 32, 70, 77, 75 area. 33.82. So you have a huge range in here. But very volatile range, but sideways correction so far. Letting daily cycles get to the bottom. Still holding the rotation zone. So now if we break out to the upside over the next few days, I'm going to be watching to see if we put in a longer term topping pattern here. Silver, trying to break higher. Remember, the magnet price is still 34.50 on that. Copper, still trying to break higher, holding the rotation zone, and we still have the magnet price up there. On copper, though, I'm really watching this 503 area, as I said before. Yen, I'm going to be watching this to see if this forms a major double bottom pattern in here on any pullback, because it still has not been able to break above the rotation zone. Euro, still seeing if this is going to make a head and shoulders top. Again, a lot of stuff. There's a lot of patterns that are potentially forming, but not a lot that have triggered yet or fully set up yet. Spiders. Spiders did hit the second target. Where futures did not, the spiders have hit the second target. So the key area I'm watching on this is 541 on any major pullback. The minor level is around yesterday's low at 545. Any rally would be to the gap fill yesterday, 550.85. And right around that second target still. If it were to break through there, the 50 EMA is 555.75 area, and the final target is 560.82. The Qs, almost, but again, I talked about this. The 50 EMA being right in front of it would be the target area, so we've essentially hit this in the Qs. You know, you don't want to be trying to eke out another penny in this and with the bigger rollover, especially against the 50 EMA. Support levels are coming in about 466.75, and then the major level for me is 460 that I'll be watching. Right? Let me move this level up. Right where the first cross rotation zone is, right around there. All right. Let's see. Let me see what the comments are. I got to get back through them. Yeah, good morning. I didn't get to say hi to you, Christoph. People are comparing it to Smoot Hawley, and there are some similarities in that too. You know, the problem is not necessarily that I'm not a huge fan of tariffs, by the way. And if you're going to do it, you have to do them unmeasured. You don't just try to. Because if you look at the Dallas Fed, it's not just me thinking this. Look at the Dallas Fed manufacturing survey, and Texas voted heavily for Trump, but they're complaining their butt off because it's that the levels are insane and stuff shutting down and businesses. It's not like, oh, we make goods like they're saying we make finished goods here, but we might have to get things from other countries still because everything's not made in America, and you can't. There are some countries that do things better in a manufacturing. We can still finish the goods here, but if you can't get access to those products or the tariffs are too high, it screws still manufacturing in this country, and you can't shift that overnight. And I don't agree we should manufacture. I think we should manufacture key things here, and we can finish things here, but you're not going to manufacture everything in the world in this country. It's not going to happen. We should do things like I don't think we should have drugs manufactured overseas, especially in China. We have to control our drug supply chain, and that's something that could easily be manufactured here. But everything else, should we be the world's leader in like flat screen TVs? No, probably it's look at Samsung and LG. Let them have that. That's where their manufacturing base is fine-tuned. We should bring back more chip production here, and we are working on that. But, you know, you're not going to do everything here. You're just not. It's not realistic in this world anymore. Sure. So Sterling's building a VIX call position, watching for that spike. If time EJW pattern, EWJ, dyslexia, EWJ on a weekly. That is a very interesting. So you had the breakdown pattern. Now this is basing at the high. What I'd be looking for right here on your Japan index fund, because it's been major resistance. What I'd be looking for is it to close above here, and I don't care how You know, it could even run to 74, but I'd be looking for any pullback to make sure this holds then. But that is a potential breakout play. And the first target area, I'd still use around 74.20, and then I'd look at my harmonics. But that's a very interesting pattern, Richard. Yeah, we do have to pay tariffs to other countries, but they're not around what we slapped on them. Okay, and again, I'm not saying you can't put on some kind of tariffs, but you don't ratchet them up so high so quickly. It's making too much uncertainty in this country, and that's what's causing problems. It's not that you can't dial in some tariffs if you want to do them strategically. So we're going to have to see how this all plays out. Only way U.S. managers, that's the other thing. I agree that it's not going to bring back a ton of employment in a lot of key areas if you do bring back, because a lot of it's going to be automated. That's the other thing. Certain industries that can't be automated will, but those are the industries you don't really want. You don't want shoe manufacturing out of the USA. Sorry. All right, what else do we have? We have Bitcoin. The good old Bitcoin. Still not able to close above the 62.5. Still keeping an eye on this with cycles that have now moved down, and we're coming out of overbought, and so far a sideways correction. So I'm keeping a very close eye on this, especially on any pullback into the daily rotation zone. It's called comparative advantage. Thank you, David. Thank you. Yeah, I'm not fully against any kind of tariffs. You have to do them smartly, smart. And you can use them as a negotiating point, but you don't start with absurd levels, and then it's disruptive too much to the world. And you're starting to see that in these with what companies are saying. And it also gets back to what Patrick put in here. Amazon to include cost of tariffs next to prices in their product catalog. If people want to go buy something and they see, hey, the price I'm paying 40% more because of tariffs, they're going to be pissed off. Because the whole narrative has been, oh, it's not going to really raise prices. Well, yeah, it is. Because it can't all be eaten at that level. Like a 5% tariff can generally be eaten. But what it can be absorbed through, yes, you're going to have margin contractions, but 30-40% tariff is not going to get eaten. And the problem is it's sitting too long in uncertainty principle. It's also going to affect the holiday supply chain drastically unless this gets resolved very quickly. Countries are better at making certain things, yes. Certain countries are better at making certain things. And we make nice Stetson hats. Trump is risking all the good policies on his tariffs, hope they'll work. Well, we'll see. We shall see, won't we? May we live in interesting times. What else do we have? I just want to see Amazon today. We still have the potential double in play. Doesn't mean it has to trigger. I'll actually be surprised if it triggers. I'm going to be watching with cycles at the top, but that is still the pattern. I'm not seeing a bearish flag. I'm seeing a sideways correction. Cocoa. And gold. This is still a sideways correction. I'm still watching for whether we bounce back up and set up a double top pattern or whether we break down. But the key thing for me, if we break down, the 50% retracement is going to be very key. This 32.43 area, if we do break down. Now, what I'm keeping an eye on too is cycles are back to the bottom. So could we push higher and then make a double top pattern? A double top pattern, because this was a very bearish candle last week, but we have not been able to take out last week's lows. So continue to keep an eye on last week's lows. You will pay a price for producing domestically. There's a reason why so many things are imported from China into the US and the EU. Agreed. Not everything is subsidized. Yep. All right. We don't need to hammer this anymore. It's just some of my thoughts. I lost connection at work and I am now on cell. Well, thank you for coming back in, Sterling. Sorry you lost connection at work. Going into the open, still, that's all I'm keeping an eye on to see if we pull back here and this support holds. I'll be looking for any reversal setups. On rallies, I'll be looking for sell setups up here unless we can base above 55.71 and retest it successfully and then rotate back up. With that, I shall talk to everyone tomorrow. I hope everyone has a wonderful day. Remember, Visa is actually a biggie after close with consumer spending. So do not ignore that. And then the rest of this week gets very interesting. We got huge earnings coming up, and we have other things backloaded into this week. Remember, with the GDP and PCE information coming out tomorrow morning. So do not get caught off guard with anything there. That's going to be, and then we got the ISM manufacturing and jobless claims, and then we got non-farm payrolls on Friday. So the second half of this week, we could get a little more volatility coming in if we get any strange prints. You're welcome, Anissa. I agree. We need to completely agree. We need to reconfigure our education system. I completely agree with you. It is a disaster. It's been a disaster for many, many years. With that, let's just see where the tick opened. Moderate negative opening, but not an extreme. So again, I'm going to be watching now to see how the market reacts on the next tick rollover. To see what that prints down to and how the markets. If the markets can't take out this 55.22 low area on the next tick rollover, I'll be watching for that to hold short term. If it does, then I'm watching for the bigger pullback. With that, I shall talk to everyone later. Bye for now.